Welcome to this deep dive. This week, all eyes are really on the Federal Reserve, aren't they?
Absolutely. They've got their big interest rate decision coming up.
Right, and it's happening amidst, well, quite a bit of political chatter and some interesting economic data lately.
So today, we'll be digging into that expected decision.
We'll look at the calls, especially from President Trump, for the Fed to lower rates and his criticism of Chair Powell.
And how the Fed is likely, navigating that pressure. They've got inflation, tariffs, the jobs numbers, lots to consider.
We'll also touch on what economists and market analysts are thinking about where rates might go next.
And wrap up with some other key economic news you'll want to watch this week.
Okay, so before we jump right in, if you find this conversation helpful, please do take a moment to like and subscribe. It really helps us out.
It does. So the headline expectation, it seems to be that the Fed will hold rates steady this week.
Keep that key short-term rate right where it is.
Exactly. And that's despite, as you mentioned, some pretty direct calls from the White House for a rate cut.
President Trump and Treasury Secretary Bessent have argued that, well, inflation is cooling down.
Their point is that the high borrowing costs, the ones put in place to fight that pandemic-era inflation, maybe aren't needed anymore.
It's worth remembering, too, there's that past talk about potentially replacing Powell, which definitely shook the markets a bit back then.
Right, though that was walked back. And there's also been some noise, like from Elon Musk scrutinizing Fed spending on things like building renovations.
But focusing back on the rates, the Fed officials themselves, people like Powell, seem to be saying not so fast.
They've been pretty consistent. They want to really assess the economic fallout from Trump's tariffs before they think about changing rates.
Even though the president tweeted, no inflation, pointing to lower gas prices, for example.
Yeah, that claim needs a bit of context. Gas prices have come down, that's true. But grocery prices have actually gone up. It's not quite no inflation.
And the Fed has its own preferred measure.
It does. And that gauge, it was running at 3.6% in the first quarter, still quite a bit above their 2% target.
So if you took the tariffs out of the equation, maybe you could make a stronger case for a rate cut to slow things down a bit more.
Some economists suggest that, yes, but the Fed is likely being extra cautious. They remember 2021.
The whole transitory inflation episode.
Exactly. They called it temporary, and then it, soared. So they probably don't want to make that mistake again.
And this public criticism from the president, it adds another layer of complexity, doesn't it?
It really does. Because if the Fed does cut rates soon, it could look like they're just responding to political pressure, not the economic data.
Which potentially undermines their independence. Powell himself has also talked about the tariffs.
Right. He's indicated tariffs are likely to push inflation up, not down, and could also slow down economic growth.
That sounds like a tricky balancing act for them. Higher inflation and slower growth.
It's a classic policy dilemma. What do you prioritize?
So what are the predictions then? When might we actually see a cut?
Well, many economists are looking further out, maybe September, maybe even later. Unless the economy really takes a hit from the tariffs, a significant downturn, that could force their hand earlier.
But what about Wall Street? What are the markets pricing in?
That's interesting. Based on futures trading, investors seem more optimistic, actually. They're betting on the first cut happening as soon as July.
So a bit of a disconnect there between economists and the market view.
A little bit, yeah. It reflects the uncertainty.
And going back to that other point of criticism of Fed spending, Musk mentioned the building renovations.
Yeah, a $2.5 billion project. Fed officials explain it by pointing to, rising costs for materials and labor, which we've seen everywhere.
And I think some former Fed officials added that local regulations in D.C. also pushed up costs, needing specific infrastructure work.
But it feeds into a broader critique from some, like former Governor Kevin Warsh.
What's his argument?
He's criticized the Fed not just on spending, but also for, in his view, failing on price control and getting involved in things like climate change discussions. He's called for a sort of strategic reset for the Fed.
So lots of external viewpoints. Let's pivot back to the data the Fed is actually looking at. It sounds pretty mixed.
It really is. You had unemployment ticking up to 4.2% in April. Layoffs also increased quite a bit.
Some of that due to government job cuts, right? Department of Government officials.
That was part of it, yes. And then you look at GDP for the first quarter.
A contraction, 0.3%.
Right. Though there were some specific factors there, like companies maybe importing stuff early to get ahead of tariffs, and some weirdness in gold trading.
And consumer confidence. How are people feeling?
That's taken a hit. Down significantly. People are worried about inflation still and also about job security.
So Powell acknowledged this tension, the potential conflict between their goals, low inflation and low unemployment.
He did. Especially with the tariff uncertainty hanging over everything, it makes achieving both harder.
And the jobs data itself was confusing in April. First, we got the ADP report.
Which was weak, only 62,000 new jobs, much lower than expected. Initially, that made people think, okay, maybe a rate cut is needed soon.
But then the official Bureau of Labor Statistics report came out.
And that showed 177,000 new jobs, much stronger, beating estimates.
So that kind of poured cold water on the immediate rate cut idea.
Pretty much. After that stronger report, the market odds, using the CME FedWatch tool, of a rate cut happening in June dropped quite sharply.
And Treasury yields went up.
They did, which usually signals the market thinks the Fed is going to stay put, keep rates where they are for now.
Okay, so this week, the main event is clearly the Fed's decision on Wednesday and then Powell's press conference afterwards.
Definitely. That's what everyone will be watching. But there's other stuff happening, too.
Like earnings reports.
Yeah, some big names reporting: Palantir, Ford, AMD, Uber, Disney. That gives you a pulse on different sectors.
More economic data points to watch.
We get services PMI data from S&P and ISM, the latest trade deficit numbers, consumer credit, productivity figures, all pieces of the puzzle.
And we'll hear from more Fed officials later in the week, too.
Yep. Governors Cook and Waller, plus various regional Fed presidents, are scheduled to speak on Friday. More clues, potentially.
So it really feels like this Fed decision is happening at a critical moment. Lots of economic cross-currents, plus this heightened political scrutiny.
It certainly is. There's a real debate going on about the Fed's independence, its tools, and how effective it can be in managing inflation and growth, especially with these tariffs in play.
It makes their job incredibly difficult, navigating between those mandates and all the external noise and uncertainty.
Absolutely. It'll be fascinating to hear how Powell frames their decision and their outlook on Wednesday.
Indeed. Well, that covers the main points for this deep dive on the Fed's upcoming decision.
A complex picture, but hopefully that gives you a good sense of the key factors at play.
Thanks for joining us. And again, if you found this discussion valuable, please do like and subscribe. We'll see you next time.